Welcome to the August 2025 San Antonio housing market update. I'm Krishna Perkins, and just this past weekend, I was having a conversation with a buyer. Her name is Laura. Meet Laura. And Laura is really nervous about entering the housing market right now because she has a lot of questions, a lot of uncertainty. In fact, it helped me write a market update that I'm about to deliver to you. And I wanted to include one more piece of data based on my conversation with her. So I'm going to give you that piece before we get into the typical numbers that we discuss in the San Antonio housing market update. Now, that one piece of information is a Google Trends search. So you're going to want to see this. Stick around. All right, folks, we are inside of Google Trends, and the search term that Laura and I had a conversation about just this past weekend was homes for sale. Very generic term, but there's all kinds of other iterations of it. Houses for sale, homes for sale near me. But specifically, I was looking at the search term homes for sale in San Antonio, Texas, and you can apply that wherever you're at. Homes for sale in Live Oak, Texas, homes for sale in Converse, Texas, wherever you may be residing. But the interesting part about this is that this graph is almost identical across the country with some variation here and there, but since we're in the San Antonio market, this is where I pulled the data from. Now, if you're looking at this chart, it goes from 0 to 100. So 100 simply means that it's an all-time high for that search term. It doesn't mean that's what the numbers are. It just means that's 100%. Okay, so if we look at all the way back to 2004, and if we're looking at March 2004, it says homes for sale 41. So 41 just indicates the popularity of the search term relative to the highest point of the search term. This could be 40,000 searches for the term homes for sale. You get the idea. So let's look at what this search term has been doing and what it's telling us. I look at this as a indicator like pending home sales, sold, number of homes sold, active option, new homes listed, homes going under contract. So this is just another data point that we can look at to gauge market momentum. So two dates that we want to really pay attention to: March 3rd, 2020. That's when we saw rate cuts, the massive rate cuts that led to 2.5% interest rates, 3% interest rates, all that good stuff. So if we search along here, our timeline, we are right. We're in April. So March here, in March of 2020. That's when we saw our first rate cut. Okay, and we had another one right after that, later in March, a massive one. And you can see here, April, May, really the market really started reacting to those rate cuts. This is when we saw those really cheap interest rates come into the housing market. So as you can tell here, at 96%, okay, 96. Which is very high, almost all-time high. I didn't go back to the all-time high for that, but that is a huge spike. Okay, now it's going to ebb and flow because we're going to have times when it's not going to be as popular for a search term because people just aren't looking for homes en masse. So that's December. Everybody's at Christmas. Okay, so it's down to 69%, and then it picks right back up in 2021, 77%. And then it hits another high. Okay, this is making a high in 2021 at 100%, April 2021. Okay, and we're still ebbing and flowing here. Okay, still going with seasonality. And then it spikes back up here in January 2022. Okay, and then we have our first rate increase. Okay, and we had a lot of rate increases. We had about 10 rate increases. The Fed wants to slow things down. They want to slow down borrowing. They want to slow down the housing market, all that good stuff. And that happens all throughout this period here. Okay, so the search traffic, as you can see, for homes for sale is just declining all the way through here. Now, if we fast forward to October November timeframe, we hit a bottom, okay, at 45 for the search term homes for sales. Really low, not very much interest there. That was last year. That was just an abysmal year for real estate, as you all have heard in the headlines. But as of late, okay, we're seeing an increase. Okay, we saw a pronounced decrease in the search term homes for sale. Okay, but now it appears, okay, right along with the news that we've seen a small decrease in interest rates. The Fed didn't officially lower interest rates last month, as everyone was hoping in July, but there's hope that they're going to lower interest rates in September. And what this is telling me is that this whole time, and this is the way I'm reading this, the whole time that we're seeing this decrease in interest here it correlates with the increase in interest rates. People are really turned off, but now we have a lot of hope starting to build up here, and a lot of pent-up demand. People are searching for homes for sale. They're starting to look for opportunities in the market. So buyer interest is building and building. That is my takeaway from this piece of information here. Will we see it come down again? Yeah, probably. But it looks like, to me, this 50% line here, that was a massive point of resistance in the market. We broke through it here for a bottom, but it looks like we've broken back through the top here, and it may end up continuing to go higher. So that's what I share with Laura, and we'll get to the rest of the housing market report now. So if you're trying to sell your home, and as we look into the San Antonio housing market data for the month of July, we can see here that we're ever so closer to a balanced market. In fact, we're moving closer to the middle in the balanced market for the overall market here, and we increased right into 4.92% month over month. So we're right at a little over 5.5 months worth of inventory, which is great news for buyers. So you have a lot more options out there on the market. I personally am seeing a lot of homes that have been renovated, that are turnkey, they're on the market, ready to go. Obviously, you still have builder inventory out there to choose from. Seeing some really interesting interest rates out there, 4.5%. I'll leave a link here in the description to some of those home tours that I've done here with builders. But on the selling side here, you can see that it's not a desert here for the sellers. 97.8% list price to sold price ratio. So what that means is sellers are getting almost 100% of their asking price. Those that are going under contract. Okay, so the majority of sellers that are selling are getting almost 100% of their asking price. And this is actually up 0.4% month over month. So July was a good month for sellers that were able to go under contract. In addition, in the month of July, sellers were able to get their homes sold typically in 43 days. And this is also an improvement of 4.44% month over month. So they were sold slightly faster. So, balanced market here. Both sides winning at different times in different markets. The typical median sold price that we're looking at in the month of July came in at $307,000. That is almost a 2% month over month increase in median sold price. So sellers were winning and getting almost list price for their home. And buyers are winning because they're seeing so many more opportunities for purchase in the housing market. Now, moving down into the property value, something we all want to keep an eye on, because we're hearing all these different reports of property values tanking and falling in Austin and Florida. A lot of data that I see being disseminated out there includes New Braunfels, which is another market. It is part of the San Antonio market, but in this data that I present, it's not included in there. Okay, to me, that's a different market. A lot more builders out in that market. So that data does not translate here on the market reports that I give you. Now, median estimated property values came in at $290,920. That is an increase of 0.6%. Not a huge jump or anything like that, just a modest jump in estimated property value. If you're local and you're driving around San Antonio right now, you see there's a lot of construction projects. That means less land to build on. So supply and demand play in there. As that infrastructure continues to build out and get completed, you're going to continue to see property values go up because the land values are going to go up because we're going to have scarcity. Now, looking at the 12-month change, we're looking at 3.2% increase in estimated property values. So property values holding steady, not surging beyond reason, but actually lining up with a lot of what the experts have been predicting nationwide as far as home values. And now switching over to newly listed home data. So these homes, typically the typical list price for homes that came on the market in July came in at about $300,000. Okay, that is the middle price, the typical price for homes listed. And that is actually a decrease of 3.2%. So a lot of sellers came into the market and with their eyes wide open and said, hey, we're going to list our homes aggressively because they realize that interest rates are still high and that buyers are having some of that pain there still. So hats off to those sellers that came in there newly listed at a lower price. And the number of properties that came in newly listed came in at 2,909 properties. That is an increase of 2.8 months worth of listings. Now, looking at this here, I'm not seeing a huge spike in newly listed homes. If we look year over year, this is 2021. We had 3,000 homes come on the market. That's July. Here, 3,180 homes. Fast forward to 2022, 3,160 homes. 2023, we're looking at 2,650 homes. July of 2024, 2,960 homes. And then, of course, to today, 2,910 homes. So we're not seeing a huge run up in newly listed inventory. We don't have a whole lot of people running in to list their home for sale. So that shows me there's in that area there's a lot of stability in the market. The typical sale living area for these homes, 1,891 square feet for those homes newly listed in July. And then switching up to active listings, this is where the market is seeing the biggest changes is active listings. These are the homes that have not sold. Okay, they're past the newly listed status. Typical list price for active listings that are still on the market past 10 days is $310,000. So I look at this as an opportunity zone for buyers. If you have looked at a property but previously didn't act on it, go back and look and see if that property has had a price change because it could be an opportunity to find a motivated seller. The number of properties in this active status is at 9,429 properties. Now this is increasing. Okay, we've seen this increase ever so slightly. Moving into active listings, these are the homes that have not sold. They've been on the market for at least more than 10 days, and this price here indicates the typical listing price for active listings, $310,000. The number of properties in active status is currently sitting at 9,429 properties. So to me, this is an opportunity zone for buyers. If you are a buyer, you've been in the market, you've been looking for a house, these are probably some of the most motivated listings that you're going to find. They haven't sold yet. They've already seen that hit of traffic in the property, especially if they haven't done a price change yet, or perhaps they've already had a price change and they've gone through the price change status and they're still on the market without having had a contract. These could be very motivated sellers that are ready to act. So don't be afraid to put offers out there, buyers. We're looking at 9,429 properties. If we look year over year, this is on an increase here. We're seeing more and more active listings. Now, this past month in July, not a whole lot added to the stack here. 2.5% month over month increase in active listings. The typical active listing has been on the market for about 69 days. That is an increase of 4.5%. And again, I look at this as an opportunity and motivated sellers in the market. And the typical list price, or excuse me, the typical size of these homes is sitting at 1,883 square feet. And a lot of these homes I'm looking at on the MLS are turnkey. They're ready to move in. These homes are nice. They've been updated. Yes, you can either buy a brand new home with warranty, with a low interest rate, or you can, if you wanted something that's in an established neighborhood, I am starting to see a lot of turnkey properties that have been renovated. So check that out if you're in the market for a home. If you're in this active listing pool, if you're a seller and you haven't made a move on your list price, now's the time to reevaluate your list price, especially if you've been on the market for more than 30 days. I always recommend reevaluating after 30 days and make sure that you're priced appropriately. And now moving on to new pending listings data. These are homes that are now pending in the MLS, and that means they're under contract. They've already done their inspections. They've already renegotiated price, all that good stuff. And now they're moving towards closing. But the typical pending listing in July came in at $307,495. That's up 3.1% month over month. Now, the number of properties that went into pending status came in at 1,378 properties. That's actually down 23.7%. And as you can see here, we're still in a downward trend as far as pending activity is concerned in 2025. If we look at the year here, you can see we just really came down. June and July were a lot slower than we've seen in many years. That's why we see such a outcry for interest rates to be cut. In fact, they came down naturally on their own this past week, but cuts at the Fed level would eventually translate into lower interest rates. So hopefully we'll see that for sellers. But in the meantime, paying attention to this here, as far as being a seller, is very important. If you want to sell your home and you're in a market where the number of pending transactions is continuing to decline, you want to be very, very careful with your pricing. You want to make sure that you're priced appropriately when entering the market. And the number of days on the market for new pending listings is actually up to 50 days. That's 11.1% month over month. This is something we would typically see in the later part of the year, July, August time frame. So it's really kind of on time here for this time of year. And going back to the pre-existing pending listings, these were already left over for the month of June that made it into July. Really no change in listing price. $299,990 for those pending listings. Also down 14.6% month over month for the number of properties that went pending. And then finally, sold listings. The one that we really want to hear about, $306,995 was the typical median sold price for the month of July. The total number of properties sold in July, 1,562 properties. That's down 11% month over month. So these are actually all really good signs for buyers. So if you're a buyer, you're looking for opportunity, couple that with the search traffic, maybe this is a good time to look at properties that are on the market, active, that haven't moved, and maybe even haven't had a price change. Down 11% month over month. List price to sales price ratio, again here, 97.84%. So a lot of this market movement, I'm attributing it to the sellers pricing their homes properly. So they're coming there, pricing the home, and getting it listed properly, and then it gets sold within about 3% of their list price. So if it were the other way around, if buyers were more aggressive and making offers, you would see this number. This number will be a lot lower. We'd see maybe like 87%. Okay, if the buyers were making the offers and they're getting accepted. Typical list price, or excuse me, days on market, 43 days on the market for the homes sold in July. And finally, months worth of supply. 5.54 months worth of inventory is currently on the market as of July 2025. This last month, we have an increase of 4.9% in inventory, with a 12-month increase of 14.2%. So what does that mean for buyers and sellers? For buyers, it means there's more opportunities presenting themselves. We're looking at slightly lower interest rates right now in the housing market than we've seen in several months. But we're also starting to see more interest from home buyers, going back to the Google Trends that I showed you at the very beginning. So if you're like Laura and you're in the market and you're thinking about what's to come, well, potentially more competition is on the horizon for you. If you wait too long, there's a lot of inventory right now. It looks like there's going to be some more inventory in the future, although we may see a seasonal slowdown in inventory. So now might be an ideal time to lock something up and refinance it later. If you're a seller and you're thinking about entering the market, make sure that you price your home competitively. You don't want to be lingering on the market. And also, if you're trying to sell and then buy into something else, again, this may be a unique opportunity to get into something, because there's a lot of inventory sitting on the market. There's a lot of rehabbed homes that are ready for new owners right now in the market. So take whatever from this marketing report that fits your agenda and hopefully helps you, and mull it over. If you have further questions, you can always text me at 210-260-6617. If you would like to get your home evaluated, you can reach me at homevaluetx.net. I'll get that process started. There's no obligation. And otherwise, I'll see you guys on the next video.